advice, your calls, and we end with a look at today's markets. Our first letter is from Robert, who asks, if you had to bet your entire 2026 trading P&L on calling out one overrated market narrative that everyone else seems to be hypnotized by, which narrative are you blowing up? And what's the uncomfortable truth nobody wants to admit?
Well, this one's fun because this one changes. This changes every week, month, whatever. I mean, if you asked me a month ago, it would have been silver for sure. Maybe gold, but it would have been silver for sure. But now, I got a different one. Scott, what about you?
Well,
I haven't talked to Scott about this, so I want to see what he says first,
sure.
and then I'll tell you what mine is. I think it's a layup. I think it's easy.
If I'm going to say what's going to cause this market to break,
You got to read.
Oh my God,
Books, Jerry, books.
Overrated market narrative.
What's the overrated? If you had to bet your entire P&L?
Okay, there's two that I would go with. If you want to pick a particular section, I'm going to stick. I don't think silver or gold. I wouldn't have said that a month ago. I would still say that the overhyped AI, and that somebody's going to miss. Something's going to come out that's going to be negative. That's going to cause, because I think that's been carrying, the load for the torch for going higher over the last, couple of years. But I would say the bigger one, if I'm going to say something that's going to blow up that everybody believes, or seems to be that everybody believes in, it's the buy the dip. So we're still in the buy the dip, and I think that the buy the dip is going to get smashed at some point this year.
Ooh.
Okay, that's fair.
Okay.
I think if I was to bet my entire trading P&L on one overrated market narrative, I would sell crude oil.
You mean the expectation you're saying with oil going to, quote unquote, going to 100 if this continues?
No, I'm not saying that at all. I'm saying today.
What are you saying?
77 or 78. I'm not looking at a screen right now, but it was 77 and a half this morning. It was traded over 78.
77 and 3/4 right now.
77 and 3/4, fine. At 77 and 3/4, up $20, which is about 30% move, off the lows from just about a month ago. I would say that if I was to bet my entire trading P&L on one single market narrative, it would be that crude oil, because of what's happening right now, and everybody has been buying crude, Strait of Hormuz on down to everything else. I would bet on crude being the most overpriced or overrated market narrative right now. That's what I would bet.
So
I'd be selling crude.
Buy the rumor, sell the news.
Well, I did sell. So I did two things this morning. I'm also talking my book, because this morning I sold some calls in crude oil. It did not work. When it was right here, but the calls, the premium I don't know what just happened, but they just pumped so much premium into crude options.
I mean, IV rank, I don't know what it normally is for crude. It's 109.
Yeah. It just happened this morning. It's the craziest thing. Pre-market today, like in the overnight session, the calls were at. And then as soon as the market opened this morning, somebody just came in just buying calls. So the calls, I sold calls they're now 20% higher.
What month, what cycle?
I'm trading April.
April 16. Okay, the 42 days. Okay, what calls?
Yeah, like the hundreds, 110s, and 120s. And they're rich, but they've gone up by like 20% today from where they opened.
The hundreds are 268, 273.
Yeah.
The 110s are 175, 179. 110s.
The 120s are over $1. And this morning they were like 90 cents.
I got to scroll a lot to get there. They're 115, 119.
Yeah, and this morning they were in the 90s with crude oil the same price or lower. So they just pumped a lot of premium. I also sold some crude oil futures, but I already scalped those, so I'm just short some options. Anyway, Robert, I'm going to go with crude oil, even though I still think silver and gold are overpriced. And I think Scott's right too. I think that AI is probably overpriced. I'm just not ready to short it yet. And I do think that the buy the dip in the second half of this year, after we get past the summer, See you
Come on,
later.
Peter. I need that edited. Scott's right. That might be the second time Tom's ever said that.
Well, as soon as I
Yes.
get you to read the actual question.
We
we're in
have
business.
it. Oh, God.
If I could, you know,
We
what
have
would
it
be better
recorded, so
is
don't
if-
worry.
Here's one of the things I love about you. The question comes to you, so you have this much information
Yep,
in the
yep,
email.
exactly.
I see this much, and I'm supposed to know exactly what the email was.
Yeah, you're supposed to read
readers are leaders.
his mind. Oh,
Readers are leaders, and reading is fundamental.
That's right.
There we go.
Let's do it, man. Let's have a fun show.
do
I'm
it.
Tom. He's Scott. She's Soul. And don't be shy. 989 Lost Dog.
let's take Dean from San Antonio.
Cool. Hey, Dean. What's up, man?
Hi, Dean.
I had a question. Hey, folks. I had a question for all of you. This is random shit Dean from the emails, but what's one failure in business or work that you've learned the most from in your past?
What's one failure, you said, right?
One failure, my theory is you learn a lot from failures, right? So what's one failure that you learned the most from in your past?
Well, I think you learn almost everything from failures along the way. And trust me, Scott and I have had plenty of failures that we've learned a lot from. You know, I'm gonna say that what you learn quickly in any business thing that you do is you learn that you cannot like you can't expect things. Like there's a certain people have sometimes these crazy expectations or these crazy beliefs that all they have to do is come up with an idea and that it will take care of itself. If you build it, they will come. If you build it, it will execute, all this kind of stuff. And I think what we've learned is that there's so much more to it, and it's so damn hard that not only do you have to have a good idea, not only do you have to keep tweaking it, not only do you have to do all this other stuff, but so many other pieces have to come into play to be successful. And I think that generally, people underrate and underappreciate how hard success really is.
So Shane Lowry, the golfer, this was a couple of weeks ago, he was leading some tournament. I don't remember what it was, but he was leading it after 54 holes, and I guess he had done really well here the last few years, but hadn't won. And the interviewer said, "Do you feel like you're due?" And he had the best answer. He's like, "Nobody is ever due."
I saw that.
Right? He's like, "Nobody's ever due." He's like, "I just feel like my game fits this course, or this course fits my game."
I saw that
and
interview.
play, right?
Yeah. He won,
But
didn't
that-
he?
No, he didn't win. I guess he blew up on the last day, like on the last few holes. He did not win. But Dean, that would be my answer.
Oh my God,
to
because he
that.
had like a 4-stroke lead when I turned it off.
Yeah, he blew up. But I would say, to Tom's point, nobody's ever due. I would say something a bit different, more specific, because one of the worlds that was underneath me was risk margin. And unfortunately, we learned the hard way that we needed to implement some different rules, some policies on our risk margin when we had some blowups. One, I'm thinking about the Zoom earnings during COVID. So we had to pivot, and they were expensive. They were expensive lessons, but then you learn and you say, okay, here's things that we have to do to make sure that the customer accounts are at least a little more protected. So mine would be just learning from unfortunate market moves. Fortunately, it haven't happened a lot, but we did learn along the way and had some painful lessons.
That's great.
Okay. And Soul, what about you?
Oh, boy.
Hers was coming back to work with us.
Still learning on that one, right?
Still
That's
learning.
right.
No.
Every day she thanks her lucky stars.
Yes, I do. No, I think not being afraid. Just, I've learned from being too safe, I think, in taking opportunities that I think I should have taken either before or that I was too passive about. I don't know. But I try to learn about everything, so in every situation in life.
Okay. All right. All right. Thanks.
Take
Thank
care.
you.
Take care.
Thank you. Have a great day.
All right. Yep. Bye.
I want to say we talked about this with Maria, but
I thought we did too.
Yeah, but in the
Might have
dog
been with
pound,
some. It might have been with somebody
Sorry,
else
this
because
is a
I
new
feel like
question.
we went over this. It might not have been Maria.
sure.
Yeah.
But she says, I'm new to options trading so far. I'm trading only strangles on futures options. What are your thoughts on trading only futures options? Any potential flaws in this plan? Is this a viable strategy?
Sure, it's viable.
Yeah, for sure.
mean, yeah.
And this is one of the things, I don't remember exact question, but what we talked about, I think yesterday, might have been the day before. Be agnostic to the underlying. Your strategy is your strategy. Find underlyings that you want to trade, whether, it's futures options or, even in the futures options, whether it's ES or whether it's gold or, whether it's bonds, whatever. Just use your strategies. To me, and I think Tom's going to say the same thing, it makes a difference whether it's Google, Apple, Meta, or ES. Just use your strategies and find products that you like trading.
I mean, there's nothing wrong with trading just futures options.
No.
You're going to limit yourself.
Trading only strangles.
I mean, only strangles and futures options, it's fine. You're going to limit yourself because there's way more out there. But that's like saying, you know what, I only eat steak. All right, it's not going to kill you.
Well, it might,
I mean,
but-
it might. Steaks, but
Right.
strangles maybe not.
Strangles, maybe not. But it's okay. I mean, if you want to do that, sure. But why limit yourself? But I get it. They're capital efficient. They're big products.
And if they're making money and they're comfortable doing it,
Yeah,
keep
that's
right,
going.
right.
That's right. If you like it,
There's
keep doing it.
you don't have to broaden your horizon if everything's working for you.
No.
Unless one day you feel ready.
Yeah,
Or then you try
you might
something
try
else.
it. You might stick your
Right.
toe in the water, but
Right.
And I'm not saying don't do it, but
Right.
again, to your comment about being afraid, if you're not doing it because you're afraid, then it's probably a good reason to try. Stay small, but try.
Right.
But if you're not doing it because you're like, I'm just killing it trading, whatever I'm doing trading, just keep doing that. No reason to expand.
Yeah, I mean, yeah, there's no reason to expand if your things are doing well. The only problem with futures options is that there's a limited group you can trade. That's it. It's only like a handful, like 10. But that's okay.
Yep.
All right, great. Let's go to the next one.
Okay.
For theta, what's a good theta threshold relative to position size risk? When is theta too low to bother with?
That's a good question. And lucky thing for you, I have studied this question for a number of years. So I'm going to give you some numbers that you can write down. And for theta, what's a good theta threshold relative to position size and risk? Well, what it is what's a good theta relative to your net lick? That's the easiest way to remain consistent. That's the easiest way to answer this question. So what's a good theta threshold relative to your net lick? And it's 0.1 to 0.3%. If you're in that 0.1 on the low side, you can be lower than that if you want, but 0.1 on the low side, 0.3 on the high side, that's where you want to be theta. That's your theta to net lick. That's kind of like your ideal ratio. When theta is too low to borrow with, you're below 0.1. And so, I mean, you have some decay, but you're not thinking about the risk of, there's not a lot of gamma risk there. There's not a lot of theta risk when it's below 0.1. But again, that's not 1%, it's 1/10 of 1%. Okay? So anywhere between 1/10 of 1% and 3/10 of 1%. And it depends on account size. If you have a big account, you're going to be closer to 1/10 of 1%. If you have a smaller account, you're going to be closer to 3/10 of 1%. But in that range, as a percent of net lick.
All right, great,
Can't get a more mathematical answer than that.
perfect.
Years
I
of
hope you
research.
wrote it down.
Yes.
All right, we'll take Yunior from Florida.
Oh.
Hello.
Yo, Yunior.
Oh, good morning. Good morning, Sol. Good morning, Scott.
Good
Happy
morning.
birthday.
Oh, the first one. Well, the first one today.
Yes. Thank
Do
you.
you know how I remember your birthday? Because today is my grandmother's birthday. She's 104.
Oh,
There you
happy
go.
birthday to her. How lovely.
111, Tom. 111. That's the goal.
That's
I have
the
a
goal.
good motivation for you.
Go ahead.
I have a good motivation for you for 111. Imagine this future, okay?
Okay.
24/7 trading, tokenized assets, artificial intelligence, singularity right here.
Are you launching them? Are you launching them, or do I have to launch these?
No, I don't know. Let's see what happens.
First of all,
Quantum computer. Quantum computer, listen. Quantum computer, okay? The centralized tokenized quantum computer. Everything in one place. Like a broker, the exchange, then capital allocation, the capital allocation, everybody in the planet go to the capital allocation, one planetary global pool, all assets, positive drift, right? All assets, positive drift, and market cap very high, and then high probability of profit, and then velocity of profit 2 and 3x. What do you think about this dream? And then quantum, everything quantum decentralized. Huh?
I think you've just summed up the next 20 years. You got, or the next 10 years, whatever's in front of us. But yeah, I mean, listen, in a perfect world, you just laid out where we're going in the next, next couple of years to whenever. I could not agree more. I don't think it's a situation where you necessarily everything has to be tokenized. There's going to be 24/7 trading without tokenization, but the tokenization opens everything we do up to the whole world. So it's going to be cool. And quantum, I hope I live long enough, but I'm going to try.
Yeah, I want to see you at 111, like he said.
Yep, there you go, man.
Talking about it.
Yunior, thanks so much, man. Take care. Have a great day.
Thank you.
Take care. Bye. Good day.
Thanks.
Bye.
Thanks, you
Take care.
too.
Yeah, no, that's good stuff.
That's good stuff. He's got the business plan for you.
Yeah, he's got the
all set up.
He threw everything. He threw the kitchen
Everything
sink.
in the kitchen sink.
Yeah. I mean, we're going to spend bringing up the concept, bringing up the topic of quantum yesterday. Got a lot of people all fired up and a lot of juices, and I got more links that I know what to do with to MIT courses, to Stanford courses, to
fun.
Yeah, lots of online stuff that they're like, Tom, you got to check this stuff out. So I've got a whole weekend's worth of videos to watch and papers to read. So it's gonna be fun.
Interesting. Yeah. Fun.
Yeah.
Okay. Let's take Saylor from Chapel Hill. Hi, Saylor.
Saylor, what's up, man?
Hey.
Hi.
Oh, what's up? Saylor.
Cute name.
Thank you.
What's your question?
I was just wondering what's one thing you wish you guys started doing when you were 19 to help your career later on?
Scott?
Scott's going to say less drugs, but he's not going to be right.
Well, no, what I'm going to say is I wish I started trading.
Right.
I didn't know anything about it, but there wasn't accessibility when I was 19. When I was 19, there were no apps, everything you had to go through a broker. So it wasn't like it was there and I just didn't do it, but I wish it was. Sort of like I was like Tom was way, he's a little older than me, so he was way behind this, but I was just at the cutting edge of computers. And for me in school, it was like always a year or two behind me. So I wish I was a little more involved with that. I don't know if it would have taken me in a different direction, but for sure, trading. I wish I started earlier.
Saylor, I think about a lot, like what could we have done differently? And when you're 19, it's really hard to think, it's hard to think outside of your friend group and outside of like your own little network and all that kind of stuff. It's really tough because you don't know, what's out there. You don't know what you're going to become. You don't know what different things are going to turn you on as far as like what businesses you want to be in. And so I think the most important thing you can do when you're 19 is keep an open mind and be very objective and say, you know what, I got to try a lot of different stuff. And because you don't know what you're going to end up really liking, and you don't know what's going to be like a perfect fit for you. But what I always tell young people, 19, 18, 20, 21, take as much risk as you can. Just like Scott just said, like he wished he started trading then. It doesn't matter, but just find things where where there's some risk involved, whether that means you buy a little crypto, you buy some stocks, you do certain things where there's some risk involved, and just learn the concept of, making decisions, taking risk, and trying new things. I wish I had done that. We didn't have any money when we were like 19, so it was a little harder. But kids today have a little bit more money, and they
Can kids trade in a 529? I don't
No,
remember this.
no, but they can trade it in their own accounts when they're over 18.
No, 529 is
529,
for
forget.
parents. That's for parents.
But Saylor, just do things that maybe you wouldn't normally do, and try different things and take a lot of risk, and you'll get rewarded for it. Not right away, but you'll get rewarded for it down the line.
Yeah.
You're already ahead if you're asking the right questions.
Yeah, if you're just even watching this show, you're doing the right thing.
Yeah.
Perfect. Thank you guys so much.
Hey, you take care.
Thank you.
Have
Have
a
a
great
good-
day. See, I want to have video calls.
Oh, I thought you were going to say I want to have more kids.
I want to see Saylor. What? No. What?
I thought
Oh,
you were
where
saying-
would that come from?
Because you just see, I want to have more kids.
No.
No? Okay.
I'm okay. All right. The Dog Pound says, regarding the Lossdog launch, what is a good pitch I can make to my friends and family to help them to click the referral link and sign up? Like, give me an elevator pitch.
Oh, okay. I mean, first of all, I think the elevator pitch is do something that you wouldn't normally do. Like the elevator pitch is, I know you don't know who these people are, and I know that's why they're giving away free crypto. That's why they're building all this cool software. But I've used their stuff before. They're legit. Okay, they built the platforms that route the most orders in the world right now to different listed markets. These guys are not, new to the scene in the fintech world, and just give it a shot. You know what? See what they built, and it doesn't cost you anything. If you don't like it, you get all your money back.
That's what I'm selling people. Like, it's free. There's no strings attached whatsoever.
And typically, when something's free, you're saying, "Well, how
Right,
good
what's
could
the
it be?"
catch?
But
No, sometimes you're
this-
saying I can't afford free.
and sometimes you can't afford free, but that's not the case here.
Not the
there's
case.
Zero obligation. Sign up if they like it, which I believe they will. Amazing if they don't.
They
Okay,
don't.
you tried to steer them in the direction of doing something that will hopefully be really significant for them.
You know, there's plenty of times in my life when I agree with the saying, sometimes you can't afford free.
Yeah.
But
this is not one of them.
this is not
No.
one of them. This is a really, listen, we're promoting a new product, and in order to get it out there, there's lots of different kinds of marketing and different things you can do, and we came up with our own idea, and we've been pretty good marketers over the last 25 years. So this is just something different, and I think it's very real. I think you're gonna like it.
It's very real. Okay. Dog Pound says, specifically our friend Ron, he says, I heard Scott say never trade calendar on VIX. What about a diagonal? Scott?
So this goes back. I wasn't even thinking
Ron,
of
you
it.
had to bring this up.
Yeah, this is a
remember
Oh,
painful
everything.
one, and we learned. I mean, this was 08, 09. I was actually putting this one out of my mind.
Yeah, I was hoping we never had to deal with a VIX calendar again as long as we live.
As long as we live, this was one of the most painful situations that for sure that.
But you don't have to tell. You just tell them why. Can you do?
The problem
what
with
about a diagonal?
VIX, if you're doing calendars and diagonals are the same, you're in separate. It doesn't make a difference what your strikes are. That's all the difference is, a calendar versus a diagonal. You're still different cycles. Just stay in the same cycle if you're going to trade VIX. The problem with VIX and calendars in particular, calendars in an equity can never go inverted. They can never be done for credits, period. The problem with VIX calendars absolutely can go trade for credits, and they can trade for huge credits. And that's what they did during the 08-09 period. And we had some accounts just get absolutely obliterated. So
Well, they did in 2022.
and in 2022. So my feeling, I'm not a fan of the VIX. I don't think it's a great retail product. I love looking at the VIX. I love looking at it as an indicator. I don't like trading it. And you have to just be really careful if you're trading it. And from my perspective, whatever you're doing, stay in the same cycle.
There are other VIX products, and they all. Here's my deal, Ron. They all suck right now. Like UBXY, untradeable. VXX, very average at best as a trading vehicle, and the VIX itself, very average as a trading vehicle. But if you want to do calendars, you want to do diagonals, you do them in VXX, okay? Because you can do them in there. There's no issue in there. Not the same as the VIX. So just don't do them in VIX, but you can do them in VXX.
Yeah.
And if you really want to trade, if you really want to trade volatility, try VXM, which is the micro VIX future. That's kind of a decent product if you want to just buy or sell volatility.
Okay. There you go. Thanks, Ron. All right, next up. I'm currently in real estate and I don't like it. I don't believe in it the same way I believe in financial markets. What is the future of financial advising and how do you position yourself to get into that space? How will that space change with AI? Our friend Austin. It's definitely going to change.
Well, we talked about this yesterday. When we were growing up, everything was, and this was, we got it straight from our parents and they got it from their parents, that the most important thing to do was to save a little money, own your house, and then you were set for life. I think the world's changed a lot. The reason I don't believe in real estate the same way, because I've been living in Chicago for 44 years and I've never made a penny in real estate. So it's been very difficult for me to believe in real estate. On the other hand, the future of financial advising is, I think, going to change dramatically because of AI. Advisors, all of a sudden, just got a lot smarter. Because if you were an advisor and you're with you were with firm A, basically the only information you had at your fingertips was whatever firm A had. But now, the information at your fingertips is what every firm has, because everybody knows everything about everything. So financial advisors just got a hell of a lot smarter. And when they get smarter because of technology, they also get cheaper. So that space, the RIA, quote, RIA/advisory space, is going to get significantly better and significantly cheaper. Now, does that mean they know anything? Hell no. Hell no. In fact, your technology is going to be able to do a better job advising you than your advisors. You know what your advisors are going to be there for? For you to lean on, for you to hold your hand, to take you out to dinner, to be empathetic. They're your empathy play.
So basically, you're paying for a friend.
You're paying for a friend. That's okay, by the way, because people need that. That is a very valuable role in the world of finance. Is you need somebody that you can talk to. You need somebody that you can bitch to, cry to, hold their hand, hold him or her hand. So it's a very important role, but it's a different role. You don't need them anymore to make the decisions for you. You need them to hold your hand. That's the new role of AI.
And I think that what we're going to see, it's going to be analogous to what online trading did, as I was just talking about. Back when I was 18, 19 years old, you had to call a broker.
Yeah.
Like you couldn't put a trade in.
Right.
I mean, and I think we're seeing that paradigm change where we saw everybody, now you could do it right here on your phone.
Yeah.
And now we're going to go to a situation where financial advisors are going to be in a similar situation where, to Tom's point, they're going to have all the information, which is great if you want it, but their pricing is going to get compressed for sure because they're not going to be needed in the same way. Not to say they're not going to be needed. You're going to still be able to extract value from them if that's what you want to do, but they're going to have to change with the times for sure.
Oh yeah, that business is going to change
dramatically.
Oh boy. It's no longer going to be annuitized at 60 basis points. It's going to be annuitized at 20 basis points. But, they're going to get paid a lot of money for holding your hand.
Yep.
Okay. Our friend Keone from the Dog Pound says, gold non-forward months have 0 DT contracts that we can sell. The forward month does not have these 0 DT contracts. Is there any reason why I shouldn't be trading these versus forward month contracts?
I mean, the only reason you shouldn't be trading something is because there's very limited liquidity in there. But in the futures world, just remember, if you're trading 0 DT, that's one thing. But if you're trading something that's out in time, you want to be in the most liquid month. So you want to be in what they call the active month. But the only reason you shouldn't trade something is because A, there's no liquidity, and B, you got to make sure if you're trading somewhere out in time in the futures options world, that you understand that futures option is tied to a different future. So the price of gold that you're looking at today in the front month might be very different than the future price of gold, which you're looking at in the back month. I actually haven't looked at gold. I can't tell you if it's in contango or backwardation right now, but My guess it's contango, but I don't really know. So,
Okay, thank you.
but you should always trade the active front month where all the liquidity is.
There you go.
That's your default. That's a smart thing to do.
All right, next. I'm an undergrad at NC State, and I have bought crypto but never stocks.
Okay.
My major is business with a minor in entrepreneurship, but I haven't taken any market structure classes yet. To learn trading, what should I focus on?
I'm really glad that we're getting 19-year-old students calling
Yes.
in. We're getting, this person from NC State. I don't know why so many from North Carolina, but which is awesome. I had to look up, how far do you think North Carolina State is from?
20 minutes.
Perfect.
I'm gonna say further. How far?
Like 25 minutes.
That's close. What's
Duke?
North
20
Carolina
minutes.
to Duke it's Tobacco Road. It's like 10 miles, isn't
Yeah,
it?
it's 20 minutes.
20 minutes.
Yeah.
Nice.
So North Carolina State, Duke, and North Carolina are all within 20 minutes of each other?
Yeah, something like that. Yeah.
Wow.
So this person's bought crypto. That's good that you bought crypto. That means you've been on some kind of app like Kraken or Coinbase or somebody else. So you've been on a financial app. That's a really good start. And with a major in business and a minor in entrepreneurship, I actually really like that. The reason that market structure classes are important is because the world functions in kind of in a form of an auction marketplace, and so meaning that everything kind of has a two-sided market, and businesses and jobs and basically product and everything else. And one of the good things about learning market structure is you start to learn how an auction marketplace works and takes place. So to learn trading, what I think you should focus on is depends on the type of classes that are offered. But I would, if it was my choice, I would focus on much more down. I would go down the derivative path. Most schools, I'm sure North Carolina State is the same, will offer classes on derivatives and on kind of they'll narrow in on listed products as opposed to things. I'd be less macro and more exchange focused. That'd be my answer. I don't know
Any
what
thoughts,
you think.
Scott?
Yeah, no, I think it's fair, but the key here is you have to do it.
Yeah, you have to do
just start doing something.
Yeah.
Whether you want to trade, stocks, want to trade equities, whether you want to trade derivatives. I agree with Tom. I think you're going to learn a lot more. Derivatives are three-dimensional, equities are two-dimensional. So I think you'll learn a lot more. But what you're going to learn, we talk about this all the time, there's so much more to a college education than what's in the books. You're learning how to network. You're learning how to create friend groups. You're learning how to navigate on your own, most likely for the first time. This is very similar. Throw it into the mix and just try. If you have some money, and if you have crypto, you have obviously some money, you're doing that. Doesn't have to be anything big, but the engagement is the key. So don't be afraid to just put your toe in the water and say, I'm going to try a couple different things and see what works and what I like doing. And then all of a sudden from there, you're going to grow and evolve. But you have to do it.
Yeah.
Great.
Yeah, that's it, man. I'd stay away from the macro stuff and focus kind of, just get into kind of the real nitty gritty of however your school defines strategic finance. That's what I would get into because that's where the real value is. And that's also how you differentiate yourself in the interview process.
All right, cool. That's true. Okay, next. Do you adjust your 0 days? Example, rolling up puts for a credit as the calls get tested.
Hell yeah. And vice versa, rolling down calls as the puts get tested. Like today, with the S&Ps down 50, you'd be rolling down calls as your puts are getting tested. But the question here is, do you adjust 0 days? And the answer is, you better.
Yeah, you better.
You better, because if you don't, could you get chopped up by adjusting 0 days? Hell yeah. But comes with the territory. If you're trading 0 days, you're going to get chopped up. The question is, does the premium you're collecting, exceed the amount of chop? But you have to adjust.
Yeah. I mean, if you don't, then you're just a deer in headlights and hoping that you're right. And that's a situation that could lead to a disaster. You could make pennies and nickels and you could lose dollars.
Yeah, there is a crazy, so a couple of years ago, we decided when they first came out with zero DTs, and maybe a year after, we decided to research this, rolling up and down versus doing nothing. And it's really interesting. And I'm probably going to hate myself for even telling you this, but in the end, the difference between rolling up or down, you're rolling up your puts or rolling down your calls versus doing absolutely nothing, in the end, the difference is actually pretty minimal. Like, it doesn't make that big a difference. The challenge is intraday, you're gonna go insane with the amount of risk that you're taking when you don't make those adjustments. So in the end, after a lot of different, like if you go through this process for like an entire year and you never touch anything, the results are going to be almost the same. But the amount of volatility swings that you take by not adjusting the positions, one person has like this kind of volatility and the other person has like this volatility. And I promise you, you want this volatility in your account, not this volatility.
Right.
Well said.
Great. Next, does it make sense to have option spread leap positions? Instead of the usual 40-day expiration, 50% plus premium collection, just a hero or zero at the money leap spread expiring in a year. I know there are backtesting tools in Tasty, but what do you think? Our friend Fausto.
I mean, does it make sense to have option spread leap positions? If that's what you like to trade, they are priced, the leaps are priced pretty damn good. And in most cases, if the underlying's liquid, and a lot of people like to use leaps because they're capital efficient over buying stock. So you can do poor man's covered calls using leaps. I personally do not, because if you have enough capital, I think sometimes it's easier to use the underlying stock than it is to use a leap. But if you're capital sensitive, sure, you can use leaps. And instead of the usual 40-day expiration, this case you might be going, I wouldn't go longer than 150 days, but 90 to 150 days, in that range, 120 maybe being kind of the sweet spot. 50% premium collection or just a hero or zero, sure. I mean, you can try it. I don't do a lot of that. It's not my style, but there are plenty of people that like leaps because they don't move around as much, so you have less intraday volatility.
Yeah, I totally agree with that. I don't trade it, but again, this is under the heading of do what works for you, and if this is what you're doing, it's working, stay with it. For me, I don't like having options that are out that far. They just don't, as Tom just said, they really tend not to move.
You got to be pretty disciplined. When you going out 120 to 150 days, you got to be pretty disciplined on that front month option that you're selling against that long back month, because you're always long the back month and short the front month. So you just got to be pretty disciplined on that back month option and make sure that you make some decent adjustments on the front month option. But a lot of people have a lot of success that way. It's just never been my style. But I mean, I'll tell you, there's a lot of retail customers that trade that way, and in a bull market, they really like it. It's a poor man's covered call. It's a long delta position generally.
Yep.
Yeah.
Okay, cool.
Yeah,
remember to call us,
Yeah,
989 Lost Dog. Send us your emails and your questions. All right, next up. What actions would you need to see from the Fed that might indicate a wider market pullback? Said Sam.
Well, Scott knows the answer to this.
I mean, same if they come out with increases in rates. I would think the market would think very negatively of that. I think, we're in the Fed, everything is they're projecting is going to be more rate cuts.
Right.
So the market is factoring rate cuts this year. If they came out with surprise rate hikes, you'd see the stock market have a massive pullback.
I have a couple things, Sam, to say about this. First of all, the Fed is not going to reverse course and raise rates, but if the Fed backed off, if they said because of this war in the Middle East, we're going to take the rate cuts off the table, I think that would be a pretty significant reason for the market to pull back. And in fact, today, bonds are down pretty good today. They got down to like 116.05 or something, which is, almost a little over almost 3 points off their highs from recently. But that's one thing. The other thing is, I'm not so sure where the bonds are trading right now, that unless the Fed did something drastic, I don't think anything the Fed says at this point is going to make much of a difference to the stock market. You've got a war going on. You've got lots of other things. I think the Fed is in what we call catastrophic protection mode. So the Fed's job at this point is don't screw anything up. And if something really ugly happens, we're going to provide catastrophic insurance, but we're not going to do anything that's going to move the market. I don't see the Fed doing.
Is there another supposed rate cut before Powell leaves? He's done in May, right?
I think there was one, and then I think they took it off the table or something.
Okay.
I mean, there's supposed to be 2 rate cuts this year that are priced in.
This year. I just didn't know if one was.
I don't know
it was
either.
Supposed to be 2. Yeah.
I don't know either. But I mean, they're, if anything, they're probably going to want. They're not going to want Powell to do another rate cut. They're going to want to wait for their own person to get in there. But who knows? I don't know.
Take the credit if it works, and then
Yeah.
blame Powell if it
I think in a perfect world, the Fed sits on their hands right now and stays in catastrophic defense mode, which is, in my opinion, what the Fed should do.
Well, if oil, I know you're saying you think that's the sale right now. But
Yeah.
if for whatever reason oil does go to 100 and we sit there for a while, that will be inflationary for sure.
Oh yeah.
Facts. So if it's inflationary, I don't know how they're going to continue to cut rates.
Well, if the war goes on longer, if this war, which I don't see how this war goes on very long, because, it's not really a fair fight, as they would say. But that said, the longer this goes on, the more risk there is for inflation, for inflationary pressures. If you want to play the macro game, I don't really. Here, we put it up on the board here so we can see it. So 2 cuts.
Prediction markets.
They're all even. 0, 1, and 2 cuts are wrapped around 0.25% right now.
There you go. That's the wonderful thing about prediction markets or any other kind of market right now. Everybody's got a number.
Everybody's got a number.
So your number's 25%. All right.
All right.
Good question, Sam.
Yeah. All right, next up. When selling futures options, how are they settled at expiration if in the money? Example is if I sell 1/ZBH6, which one is that?
If he
Feb
sells a March, those are March.
Okay.
So if he sells a March, those are tied to the March future, but it's a Feb option.
Okay. 2026, $114 put for 0.39.
That's 39 ticks.
Oh, for 39 ticks. And on Feb 20, oh my goodness.
And then you buy for 20
And-
ticks. So he's selling the spread for 19 ticks.
What happens on close? Joe?
No. There's no spread here. He's selling the put for 39 ticks, and on February 20th.
Oh, on Feb 20th, it's at, got it.
It's 113. So the put's in the money. So what happens? You're long bonds on expiration day on Feb 20th.
You're long an hour. So if the question is where they go, it turns into the future.
It turns into the future. So and you're going to get a March future in that case. So if you sell a Feb put, which are tied to the March futures, but if you sell a Feb 114 put for 39 ticks, and on Feb 20th the bond is at 113, so that would be the equivalent of 64 ticks in the money, you are going to be long one Feb put, and you're going to be down 25 ticks or $750.
Okay.
Don't ask me how I know this stuff, but that's just my life. It's a sad commentary on 44 years of doing this. But
a difference, I know, for ES, if you are trading the March, June, Sep, Dec, those are the future cycles, that if you are trading in that cycle, it will settle to cash ultimately. But
these are bonds, and bonds settle to futures. There's no cash settlement in bonds. So
it's only on the expiration cycles for the future for ES.
Yep.
Okie dokes. The Dog Pound asks, thoughts on this current Iran conflict? What price in oil will really start to make markets churn to the downside?
Well, I mean,
what do we think?
I think it's as much time, its duration, as it is price. So, if we saw a spike right now, oil is 78 and change, 78.68. It's up $4. So if you saw oil spike to 85 and back down to 78 today, I don't think it's going to have any impact on the stock market. If we see oil keep going up and pushing towards 100 or in that range, and it stays there for a few weeks or a few months, the market's going to have to feel the pressure. It has to.
Yeah, this is a tough question because I agree with Scott. I mean, there's, these are always kind of the hardest thing. I think if oil goes through 80, and we're really close, but I think if oil goes through 80, the market gets super nervous here. If oil goes through 90 or 100, I think there'll be a lot of pressure on the market. I think you'll scare the children.
Yeah, look at the VIX. I'm not talking about VIX cash. The other day when we were down, it was up, I think, close to $3. Yesterday it was down 2 and change, and now it's up $1.50.
Yeah.
I mean, there's a lot of uncertainty right now. When we rally, people are like, okay, fear off. As soon as we start to sell off again, fear back on, and we're not even moving that much. I mean, we're still, at 68.35, we're 200 points away in the S&Ps, which is not a big move. From all-time highs. So, but there definitely feels like it's getting a little jittery.
Well, the oil implied volatility rank in oil right now, if it's close to 110, that's telling you that the market is super nervous. And
it's 112.
112, and it's
almost
been
113. Yeah.
I mean, they've been pumping premium up in there all morning. And
this is one, if you're trading these, this is one where they're pumping premium. You're going to see call and put premium. Everything's
It's crazy.
Everything's going up.
And now I haven't started to sell it yet, but I'm going to tell you that we saw this happen recently in silver, and it didn't peak until silver IV rank got over 130, and then that was the peak in silver. So let's see. We're clearly in what we call the red zone, but we haven't started to flash those insane numbers yet. If we start to flash insane numbers like over 125 or 130, then you can start in the IVR. Intraday, then you can start to sell some premium. I'm gonna wait.
Yeah, I'm not touching oil right now.
Yeah,
I agree with you.
Andy in the dog pound asks, have you guys ever noticed that the market rallies after a Canadian stat holiday?
What's Canadian stat holiday?
I don't know.
So it's
Just
for a rally
curious
such
what the
as
other
a Santa Claus
correlations you
rally
noticed
or
for a
quadruple
rally such as
quad.
Santa Claus rally?
Quadruple witching hour. Quad witching hour. So no, I don't.
Well, first of all, we don't know what a Canadian stat. You got a computer there, Scott. Look it up. What's a Canadian stat holiday?
I will tell you.
Years ago we used to watch the market rally a lot on triple witching. That has not been the case.
There's 5 national statutory holidays observed nationwide: New Year's Day, Good Friday, Canada Day, July 1st, Labor Day, and Christmas Day.
Okay, Andy, I'm not giving you this one. Okay, the U.S. markets do not rally on Canadian stat holidays. You're not getting this one. We used to rally on triple witching all the time, but the last 5 years, triple witchings have been
They
like
killed.
80% of them have been down. So
Yeah.
that little game is off the table. So I would say that I'm not. I can't say that I've seen something. I mean, every once in a while you hear somebody go, "Oh, it always rallies the day before Thanksgiving or the day after Thanksgiving or something like that." I'm not buying any of that anymore, and triple witching included. Those have not been good for the market.
Yeah.
How about sell Rosh Hashanah, buy Yom Kippur?
You could try that too. You could sell Rosh Hashanah, buy Yom Kippur, buy Rosh Hashanah, sell Yom Kippur. Do whatever is best.
Whatever works.
Aren't we close to
Whatever
Rosh Hashanah, Yom Kippur? Isn't it coming up?
Come on, it's Passover.
Oh, it's Passover.
Rosh Hashanah, Yom
my
Kippur
key
until
is
the fall.
awful.
Come on.
Oh, it's
you're
Passover.
And I know this.
Passover.
Yeah, it's
we just had
Passover.
Purim. Did you get dressed up for Purim?
No, but I got some. What
I
I
did,
love,
but I
Tashin?
did get the cookies.
You got Homentashen?
Yes, I got cookies.
Homentashen.
My friend got me some.
No, but what I do get.
She baked them and she gave me some.
Okay, so my favorite thing this time of the year is at the supermarket. They have.
Don't, please, do not tell me the jelly candies.
I love the chocolate-covered jelly candies,
Oh, God, they're disgusting.
and I love those things.
You and my wife. Oh my God.
Chocolate-covered jelly candies.
I forget who brought me some. Did you bring some?
Those they're like
Recently? No.
Java
Somebody
makes them.
gave me some and I was like,
and also
who in the world?
I like the chocolate-covered dark chocolate covered marshmallows.
Oh, that I like.
And
Anything
then
Don
marshmallow.
Stewart does such a good routine about this.
Yeah.
About comparing Jewish holidays and the food.
But,
to
but those
that's funny.
those are good, and I also am a big fan of the chocolate
matzo brie.
No,
Chocolate-
but chocolate
what?
macaroons,
Oh,
like
of course.
dipped
All
in.
right, chocolate macaroons I can go. with.
Right.
You
That
can
one
you
is
can
easy.
get
But
chocolate macaroons at a good Italian bakery, like Tomatoes does a great job. So there's great.
Yeah, but I'm sorry, the jelly candies are just disgusting.
Well, I grew up on them. I love those.
I
jelly
did
candies.
too, but they're gross. In the white plastic,
Yeah.
the tin,
Yeah.
the plastic container. Ugh.
Yeah, I love them.
Okay. Good to know.
All right.
Take 2 of those, slap a little chopped liver in between, and there you have your Jewish holiday.
What? Ay, ay, ay.
There you go.
That's a mix. I wasn't expecting. I didn't have on my bingo card. Okay, we'll take Mike from Pennsylvania.
Because you've
Hi,
never
Mike.
tried that. You've never tried chopped liver between 2
I
chocolate
don't
covered
think
jellies.
I will. I'm out on that.
All right.
Hey, Mike.
Mike
let's-
happens to be a huge chopped liver between jelly fan. What's up, Mike?
Really, Mike?
Yeah, let's get off the chopped liver story.
Conversation.
Now, if there was a security question, when you sign up for things, what's the food you least liked? It would either be red beets or liver. So,
Really?
yeah.
It's common.
I love
You know
a good
what?
chopped
Of,
liver.
of all,
They're very acquired tastes.
so I was out
suppose.
last weekend with a buddy, and we went to breakfast together, and it was a Jewish deli. And there's not a lot of Jewish delis in Chicago, unfortunately. So we went to one, and as I was leaving, I'm like, hold on, I got to get a container of chopped liver. So I walked up to the counter, bought a container of chopped liver. I was so happy.
Yeah.
Okay.
Yeah.
The bagel, where were you?
No.
No. What was the name?
11
11
Street?
City Diner.
11 City Diner. Yeah.
Oh, 11 City. Yeah.
Yeah.
That's fake. That's a fake Jewish deli. But
Is
that's
it
Is
really?
it?
Yeah, I think so. I mean, if you start thinking with the mayonnaise, I go, okay, but I don't know if mayonnaise does chopped liver.
All right. Well, I didn't know it was fake, Scott. I didn't know yes.
Okay.
The challah wasn't amazing. I have to say that.
No, the hollow was not good.
It was not. So
But anyway, sorry,
I
Mike.
believe Scott.
We've gone off the deep end here. But if I had to pick a food that I
Not
can't eat, it's gefilte fish.
Oh.
Yeah, actually, there was a Jewish deli in Harrisburg when I lived there. It was called Mr. and Mrs. Deli 2. And the guy would have all these, cute slogans and signs. One of his was, I have no argument with the guy who has lower prices than me. He knows his value better than I do.
That's good.
That's
It's a good one.
That's really
All right,
good.
So I was having a debate with Jeff on hold, and I think you're underutilizing him because answering the phone says, looking at his background, he's got a lot of investing experience. But we were debating. I said, I don't think Tom and Scott get that involved with the companies that they invest in or incubate. And he said the opposite. So we thought we'd put the question to you, but it might cost you $15,000. I'll explain later.
Ooh.
Ooh.
It depends. Scott and I are heavily involved in one company that we're invested in right now, and I'm heavily involved in another company because I'm mentoring, in both places I'm mentoring the CEO. But in other companies, we are definitely a very passive, silent, we're silent and passive. It really depends. Sometimes when we're the lead investors, we will get more involved, but most of the time we're kind of like tag-along investors, and so we'll try to be silent unless somebody asks us for help. We'll be pretty silent. I mean, that's we don't have a lot of bandwidth. I mean, I
Right.
can't speak for Scott, but personally, I don't have any more time, so I help a few people that I can, and that's all I can do.
Yeah, completely agree. We are involved with some and hands off in others.
So
Well, what
what's the
prompted the
15,000?
question-
Yeah, what's 15
Well,
grand?
what prompted the question was Soul Shoes. I've looked at your friend Dylan Ratigan's Euphoria,
Yeah.
and a lot of the shoes are like $300 to $500, but he's got a couple of pair that are 13 to 15K.
Yeah.
So, as a shareholder, you're going to support him by buying that $15,000 pair of shoes?
Well,
I will answer that question for Tom. No.
Well, it's really funny because Dylan is a very close friend of mine. So I am an investor in his company, and no, I don't even talk to him about it. I'm completely silent and passive. But I did, when I invested, I did say, Dylan, I would like to have a pair of shoes. And his response to me was,
Go buy them.
Go
what?
buy them.
No,
Here's
no,
the
no.
website.
No. He said, I would love to make you a pair of shoes, but we can't. Like,
Oh, but they're custom made
they're custom made, and in Italy they don't make 12 and a halves.
to your.
Oh,
They
really?
don't?
Right, they don't.
Are you kidding? No.
Yeah, they
that can't
don't.
be right.
Yeah.
No, that
That
maybe
can't be right.
is no way. He's just telling. That's his way of getting out,
Yeah.
giving you a pair of
Yeah,
shoes.
yeah.
Because I buy shoes I buy sneakers. It's
Yes.
Italian, and they definitely.
Ferragamo and everybody, they have.
These are
They have
custom
huge-
made.
Okay, but then he or
What does
his
custom made mean?
factory,
Like you're
whatever.
not getting a mold of your foot.
Yes.
You do?
Yes.
No, you don't get a mold of your foot.
Not
but
a mold, but
Then
they do
how is it
They
custom
do it for
made?
your foot.
they're making up to order.
That's what he said. No.
What does that mean? They're making them. No. Oh my God, you're so
No.
young.
No.
What?
Yeah, he has no
what
idea.
it means is what it means is they have artisans. They like get the leather and
Yeah, right.
whatever else.
It's like
is
goat
needed.
leather. Listen, Mike, I'm going to see Dylan next week. He's going to be in town, so we're going to have dinner together. And I'm going to point him out this. I'm going to ask about this question. Tell him that I have to have a pair of shoes. But then as soon as I get one, then Sol's going to want one. She's going
Yeah,
to
and
take
I
it
want
from
one
me.
too, and I'm a
Of
12 and a
course
half, so
I
you can
want
get me a
one.
pair too.
And then
I'm the
Scott's
same
going to
size.
want
And
one.
it's free advertising. Hello, everybody looks at my shoes,
Right?
right?
Yeah, well, your shoes are way more important to her than me.
Clearly.
Yeah. I just want to have.
I'm not going to die on
One
that hill.
flat-
That's for sure.
No.
Yeah, one quick suggestion. I want you guys to ditch the 3-second delay because it makes it easier. It would make it easier to watch you on the screen.
Oh, that delay's not on us. That's a
that's
technology
YouTube.
delay. That's YouTube. That has nothing to do with us.
Yeah.
But
We're
you're
not
like
we're not delaying.
CBS. Okay. Because like I say, it's not like you're CBS or getting.
No. We're not
saying
delaying
something
anything because we can say any word we
Okay.
want to say. It doesn't matter. We're not delaying
Yeah.
anything.
Okay.
No, we're
All
streaming
right.
live. It's just there's a delay in just how everything runs through. When you do a digital
Yeah.
network.
I see.
All right, Mike, we got to run because we're wrapping up
Thanks,
here.
Mike.
Thanks,
All right, see you.
Mike.
Bye.
See ya.
Bye.
You're welcome.
All right. Market talk. Here we
Wow.
go.
Ooh.
Bitcoin coming down a little bit, down 1,700. You got oil still 78. What'd you say, Tom? 80? 78, 75.
Yeah, that's about the highest it's been today.
Yeah, let's see. It has been 79.05, so it's right here. SPOOs are coming
I had a
off.
78.33 offer in earlier, but I canceled it right before the show. So now I get to
Cancel close.
sell. I canceled close, so now I'm going to put it in higher since after the show.
Look at you.
Look at
Uh,
you're
SPOOs are
saving me
down
money.
38. So after
No.
a strong rally yesterday and after the close, they were up a little bit last night, and they've been heavy all day. Gold's down 27, Nasdaq's down 66, silver's down 85. VIX cash up 110, VIX future up 135. I don't think anything. I mean, I'm not seeing anything that's really jumping out at me that says I need to get involved right now. How about by you?
There's some stocks that are getting kind of interesting to me. I kind of starting to like a few of the Chinese stocks here. They've been slapped around and beaten up. I bought a little BABA yesterday. It's down again pretty big today. So I'm going to buy a little after the show. I kind of like Apple here. It was down more already today and it's bounced back a little bit. And it's been really heavy. So I kind of like that. Of the other stocks, what else have we done today? Oh, and not well. I started buying a few bonds last night. They're 116.12. I sold the 115 puts at 54. They traded up to 62. So it wasn't a great sale. I sold them in the middle of the night. And I also bought some bonds outright. So I've got a little bit long bonds, not at good prices. And let's see, what else? My recommendation to you, Scott, because I'm going to give you one here.
Oh.
I
Love
haven't
it.
done anything here today, but I'm already long it.
Yeah.
I would sell some puts in the yen here.
Oh, this is your yen trade.
This is my yen trade here, but it's gotten really cheap, and I would sell some puts in the yen. And I would sell some puts in the bonds. I'm a little early, but if you could sell some 115 puts at 60, you'd be buying bonds at 114 in April. I kind of like that trade.
Okay, let's take one last call. David from New Jersey. Hi, David.
Ooh, right on the bell, David. What's up, man?
Tom, whenever I see you in New York at Webster Hall, I always want to talk hockey with you, but you're like a rock star. Everyone's around you. I walk up to you, I whisper in your ear, Tom, you make us fellow Jew boys proud. And that's all I ever get to say to you. So great to speak to you. I love the show.
Thanks, man.
Hockey was amazing. The hockey was amazing, the Olympics.
Yeah, well, you guys probably had a really good welcome home party in Jersey, I'm sure.
Last night I went to the Devils game. Jack Hughes, rock star. It was great. They had the women come out. It was very, very nice.
That's cool. That's cool.
Question for you. When I'm looking at the IV rank, how recently is that updated? Is that based on yesterday's
No, it's real time.
close? Is that, yeah.
It's real time. It's tick for tick. It's literally
tick,
real
okay.
time. As soon as the options change, it changes the IVR. The IVR is all they do at night is they fence it in from 0 to 100. So like when Scott said that IV rank in CL is 112 right now, that'll stay that way until or wherever it goes during the day. Like when and at the close say it'll be maxed out at 100 if it's still over 100. That's the only difference. But intraday, it's real time and it moves tick for tick.
Okay. And then a question: What is going on in the futures market that makes scalping so hard? Are there just layers that we're just not aware about happening in microseconds, or is it just that's just by the nature of the beast, or what?
It's the nature of the beast, man. You know what?
That's how they move.
David, we've been scalping futures since before most people were born, and it never gets easier. It is this. I mean, the markets are better now than they've ever been, but
That's how they roll.
it never gets any easier, and that's just how they roll. Man, this is the way it's been
great.
since the beginning of time.
Okay, and last thing, but to go on, you told the story one time about the perfect answer to tell when you go to the casinos and your wife asked you how'd you do or something. There was an answer. Can you tell that story?
Yeah, you always made a little bit of money.
You always made a
give it
little
to
bit of money,
It's
give her
already
half. Come on, man.
give her
I hate
half.
to
You
give away all
give
the
her half.
secrets
It's
because
already go
No, you said everyone always says break. I broke even, and that's the wrong answer because you always say, oh, I won, and you give her half, of course, right?
Yeah, of course.
Beautiful.
But
Thank you.
everybody always does say you break even, but you know that nobody breaks even. The standard
If somebody
answer
tells you
among-
they broke even, they got killed.
it's part of the guy's code when you go to Vegas. How'd you do in Vegas? Oh, we broke even.
Yeah.
I don't like to
Beautiful.
tell
Love you
Saul.
guys, man. We'll be
I
listening.
don't like to tell Saul about guy code thing.
Oh, for sure. Love you guys. I'll be listening, guys.
Thanks, man.
Thank you.
Thanks, Dave. All right. Well, I need to say, I know we don't celebrate, but a very early happy birthday
Ugh.
to you. Birthday's tomorrow. We're not going to be on air, so I hope you
Thank
enjoy
God.
it.
Monday, Tuesday, Wednesday, and
Thank
Thursday.
God, he says.
From 9. I don't celebrate birthdays. At some point, you got to stop celebrating birthdays.
Why?
Because I don't want to
Why
celebrate
do you
birthdays.
stop
think it's the
celebrating anything? That's
opposite.
life. Just own
Celebrate
it. Just
every
say.
day.
I do celebrate every day. I just don't want to celebrate birthdays anymore. But anyway, Monday, Tuesday, Wednesday, Thursday,
Silly boy.
9 to 10. Tom, Scott, and Sol, thank you guys so much.
Please like this video, subscribe
Thank
to our
you.
channel.
We will see you Monday.
Email us your questions.
And over the weekend, please help us get as many people as possible signed up. We have $1 million to give away. And we're probably only about halfway there right now, so we need to get to the full $1 million. Otherwise, I got to give it to Scott. You don't want him to get any more money.
Okay,
Have a good
Slash,
day.
take
Thank
us
you.
out.